Back then I was considered a heretic who saw a major change coming in the banking industry. We were way ahead of everybody else. And the same thing today. We're seeing a major change in the way that banks operate. So once again, I'm considered a heretic, and we're building that business today.
Welcome to the I Own It podcast with Ben Reinberg.
We're live from the Ben Reinberg I Own It studios today in Laguna Beach, and we have an incredible guest today who's an entrepreneur, businessman, Gene Grant. Thank you for joining us today. It's really nice to see you, and appreciate you coming up to Laguna Beach to see us today.
Well, I appreciate you extending the invitation to be here, Ben.
Absolutely. Well, let's kick things off. Let's talk about your career journey in finance over the past 3 decades, and talk about what led you to be the founder of Levenfeld Financial.
I started off in 1990. I came across from Canada to New York. Now, you want to talk about a cultural shock. I was born and raised in Winnipeg, Manitoba, Canada. Then my wife and I went to New York City, where I was doing the PhD in finance at NYU. That was a good program, but after a couple of years of that, I realized that I was not cut out to be an academic. So I walked across the street, literally, to 4 World Trade Center, where I was trained in how to make markets and cocoa options, of all things. I traded there, got my own badge, spent a couple of years on the trading floor on the commodity side before moving to Chicago. Chicago, I joined a futures commission merchant, and I helped set up their 24/5 trading desk. And then I did that for another futures commission merchant. But at the time, it was funny. So I left the ivory tower. I left with a lot of education to really being on the trading side, and it wasn't as stimulating as I thought it would be. And I got an opportunity to join Deutsche Bank in 1996. So Deutsche Bank really became an investment bank in 1995. But by 96, they were making so much money, the board in Frankfurt threatened to shut down the investment bank unless they got in controls and infrastructure. So I was hired as the first chief operating officer for interest rate derivatives and fixed income trading. So I really took care of everything but sales and trading for what at the time was a multi-billion-dollar business. And that was an incredibly exciting time. You know, here we are, 20, almost 30 years later, and I wish I could go back in time and relive those years again, because they were absolutely amazing. I left Deutsche Bank. I was actually being recruited away to another firm that doesn't exist anymore. But during that recruitment process, the guy I was going to work for got sacked. So I ended up going to a software company, where I took over as CEO of this moderate-sized software company. Completely, gave them new strategic direction, changed their technology, and then during that time, I did an evaluation of my own skill sets, the skill set of the people I know, and tried to figure out what I should do next. And don't worry, this is germane to Levelfield. So
right, sure.
This is 1999, so you got to remember, 1999, pre-internet, pre-everything, really.
Y2K going on as well.
In the background. And I came up with this idea, and I started to become, and I hate the phrase, but a thought leader. And I started writing and talking about this thing, and I was deemed a heretic by people in the traditional banking industry. So remember, 1999, I started talking about internet banking. Now, back then, the people said, no one will ever stop going to branches. What are you doing? No one's going to trust the internet. The chief information officer for Charles Schwab, he did his famous quote at the time. He said, there's 3 natural uses for the internet: stock trading, email, and pornography. Now, I can't disagree with them. I think those 3 things have really driven the entire internet. But my thing about banking was, this is where I thought things are going to go. So I went and I took a very early stage company public on the London Stock Exchange junior market, and we actually developed the technology and did a de novo, or a brand new bank here in the United States. That went as you would expect. I mean, great years and then some bad year. We had a little trouble in the boardroom, so it didn't end as well as it started. And so I returned back to investment banking, where I spent 6 years before being recruited by a company called Standard Chartered and moved to Singapore. Now, for the first time in my life, I moved away from the business side, and I joined the technology side as the global head of derivatives technology for Standard Chartered Bank. I didn't enjoy the tech side as much as the business side, and then I left and did some consulting once again for ANZ Bank, among others, before being recruited by BBVA, the global Spanish bank, and I moved to Madrid, Spain. I had a great job in Madrid working globally in terms of the technology investment budget, again, as part of the front office management team. And I guess I did well because they asked me to move to the United States and become the chief operating officer for the corporate investment bank here in the U.S. I did that until about 2016, and then left Standard Chartered. And then I did what you're supposed to do after you've worked a very long life and never really taken a break, is I bought a motorcycle and the wife and I toured around the U.S. and Canada. I did that for most of a year. And then in the background, my son and my best friend kept telling me to look at cryptocurrency. Now, I didn't say no. I said hell no, because why would I want to get involved in something that had a really poor reputation in 2017 and ruin what I thought was a pretty good career that I've been building for, at that time, like 28 years. Finally, in the fall of 17, I agreed to do what I did for banks, which is I'd do a deep dive and decide, is there a real business there, and if so, what? And by the time I finished it, which was in the roughly January 2018, I was both shocked and horrified by what I saw. I was shocked by the sheer amount of money flowing through the space, and I was absolutely horrified by whose hands it was flowing through. These guys didn't recognize that they were dealing with other people's money, which almost always makes them a fiduciary, and they should be well within the confines of the established financial services business. I became a fan of the idea of blockchain and digital assets. I became a big believer in the potential, but not in the execution. So I looked carefully into what I thought the structure should be, and it became clear to me that digital assets are closer to foreign exchange in the way that they trade and act. Not counting the security side, I'm talking about Bitcoin and now Ether. And I figured what we need to do is we need to get a bank to specialize in customers who are interested in that asset class and to work within the confines of the banking system. So in 2018, we founded Levelfield. I raised some money, a little seed round from friends and family. We investigated all the regulatory sides of things. Then we started to look for the next phase of funding. And of course, our friends COVID came around. And COVID really derailed us for a year and a half. But in 2022, we closed our seed round. We closed $10 million in funding, and we built out all the infrastructure. But more important to that, we went out and crafted and executed a deal to acquire Burling Bank out in Chicago. And then since January of this year, we've been actively working on the regulatory application and regulatory process to get permission to close that deal. So to answer your question, I am back to where I was in 1999. Back then I was considered a heretic who saw a major change coming in the banking industry. We were way ahead of everybody else. And the same thing today. We're seeing a major change in the way that banks operate, both in terms of the way they deal with customers and the way that banks will actually use digital assets to improve customer service and efficiency. So once again, I'm considered a heretic, and we're building that business today.
That's fantastic. I really see digital assets and blockchain as the new frontier that you really have to learn and educate and align yourself with this. And that's why with my company, Alliance, we're looking and saying, well, how do we get involved in this space? Because I believe commercial real estate is going to be at the front of this revolution of using hard assets. People can see the assets, commercial real estate. You can go kick the bricks and mortar and tying it in to, like you said, tokenize an asset and be able to sell off fractional interest to investors all over the world that want, because all over the world, investors in commercial real estate want to own property in the United States. They just don't know how to do it. And even the small investor, you might have someone in Spain and he has 500,000, 100,000, 50,000, whatever it is, 25,000, says, well, how can I own a piece and diversify my portfolio while I'm in, say, Madrid, where I used to live, and have the ability to say, well, now I own real estate in the United States. I might own some here, I own some there, I'm in stocks. To me, it's such a great diversification play for people all over the world that want, because people admire the United States. Whether we have troubles or not, people think we are this pedestal society where they come here and they travel for vacation, they see what goes on, they see freedom. And freedom brings opportunities for them. So I see a lot of opportunities with digital assets for people overseas as well as people in the United States.
You're right, and the United States is a leader in global capital markets because of our regulatory system, not despite it. And that means that when we want to raise funds from investors or we want to tokenize something, we have to do it within the framework of the existing laws because investors value those laws. Now, commercial real estate is probably the single greatest avenue, I think, for tokenization to expand. And the reason I say that is there's a lot of people that confuse the ability to tokenize an asset with liquidity. And liquidity is generally seen as the ability to buy and sell, right? And without moving the market price and to have an infinite number of people means infinite liquidity, right? But customers or investors don't come simply because you tokenize something. What we can do is we can look at the experience of the micro-cap stocks here in the United States, the pink sheets, the sub-million, $100 million companies. We've had them for many years here in the United States, but there's almost no trading volume in any of these companies. And that's because the simple existence of a trading vehicle, a stock or a token, doesn't bring interest in that. The great thing about having a commercial property, something that's valued $50 or $100 million, is that there is enough interest in that asset class and people with differing opinions to have almost a constant bid and ask or a constant market in those stocks. So CRE, I think, is probably the number one best opportunity in the short term for introducing tokenization or tokenized real estate or tokenized assets in general to the public. And I'm looking forward to working with a visionary in that area to try to bring that forward.
So what kind of digital assets are you focusing on, and what customers do you primarily serve?
So the goal of the future Burling Bank, which will be renamed the Level Field Bank, is to concentrate on serving the niche of clients who are interested in the digital asset class. Now, the Federal Reserve themselves says that's 12% of Americans. So it's not exactly a small niche of clients, but they tend to be a little more affluent. Mm-hmm. They tend to want a lot more banking services. They tend to be a little more complicated in their desires and their ability to use services in the traditional banking world. And so we want to be able to facilitate them in a number of ways. One is to be the on and off ramp. You tell me, if you were going to buy, say, Bitcoin or Ether, would you rather be able to buy it from your local bank, or would you want to go to some firm that you haven't heard of that may or may not be registered and is kind of operating on the internet, but you can't actually go to an office of theirs? Now, I'm not disparaging any one of the companies in that space, but there is nobody today that is a full-service bank with FDIC insurance that you can go and put your U.S. dollars in. They're covered by FDIC insurance, and buy Bitcoin and Ether, which are clearly not covered by FDIC insurance. So we want to be able to provide that on and off ramp for customers to safely acquire the asset. Then we want to provide custody. So we'll keep it for them so they don't have to worry. I have a funny story about somebody we know. He's got an awful lot of Bitcoin, and his greatest worry is a home invasion and somebody trying to torture him to release his private keys. And we can provide that custody so that he doesn't have to worry about that. The same way that you can't go to somebody and get them to take out more than a certain amount of dollars, we have the same protections for high net worth individuals. And then the ability to borrow against Bitcoin or other digital assets. A lot of people have a lot of money locked up in digital assets, but they need liquidity, right? They need cash for other things. So we'll be able to work with them to provide a line of credit secured by things like Bitcoin. And then, of course, very traditional banking services, right? We want to be their main bank account. Give us your direct deposit, take out your mortgage with us, and we'll be a full service. That's the idea. Now, the reason I kept saying Bitcoin and Ether is that we are trying to stay within the narrow confines of the law as it exists today. Mm-hmm. Whether I agree with that, that's a completely different conversation we can have.
Sure.
But we want to stay within commodities, and Bitcoin and Ether are arguably commodities. There's no question about Bitcoin, and there's some question about Ether, but Ether is traded on the Chicago Mercantile Exchange, which means it's a commodity. So within the banking regulations, we believe it's very clearly defined that banks can help commodities trading. So we do want to expand, obviously, as things become more clear. But today, given the state of play, we want to work with customers with those two narrow, what we call digital commodities.
So your mission statement is safe, simple, secure. Have the blowups at FTX and a few others impacted the way you explain to customers how to keep their assets safe and secure?
So we kind of saw this coming. And I know a lot of people say that today they saw FTX coming. But we are cynical at best. And when we heard the origin story for Sam Bankman-Fried, talking about how he made some money originally by doing the arbitrage between Japan and the United States and Bitcoin prices in Korea, the first thing that occurred to us is not, great, look how smart he is, was, wow, that's a violation of international capital controls. And in financial services, particularly when you're involved in risk management at all, you're taught if somebody violates a small rule, they'll probably violate a big rule.
That's right.
So we became suspicious that this is a problem. And then he told the story about how he couldn't get bank accounts because no one was giving bank accounts to trading companies. So he called it Alameda Research to try to obfuscate what it really is, right? Well, strike two, you're out.
Right.
So the same thing with some of these others, whether it's Voyager, Celsius, the stories were inconsistent and they had some holes that were clearly violations of regulatory rules. So when we talk to customers today, we point out the fact that you as a customer shouldn't give your assets, your hard-earned money, to somebody who's not going to protect them like it's their own. And as we talked about, the United States is the greatest capital markets system in the world. Our banking system is the strongest in the world because of the huge degree of oversight, the overlapping regulators, and the FDIC insurance. Now, I don't know of anybody in the United States that will say they like their bank, but we all trust them, and probably because of the FDIC.
There's no question. So how has crypto's recent downswing impacted business lately, and has it impacted your company's strategy at all?
So, well, we were up about 60% this year, which is great. The thing that has hurt me the most is in fundraising. So we are an early stage company. We raised $10 million in our seed round, and then we are in the process of doing a round today, which has been knocked back a little bit, sadly, because of things like crypto falling apart. So last year we saw this decrease of Bitcoin, and we saw once again headlines saying Bitcoin is dead. And every time we hear them, right, insiders rejoice because it means that it's not really dead. It's just the media foaming at the mouth over news.
Right.
And then we had last summer, right, whether it was FTX, Voyager, Celsius, they all went bankrupt. So right away, everybody who's involved in crypto says, "Oh no, crypto's horrible." But we're more of a banking play, right, that has some crypto adjacency. But the bank investors were going, "Oh, crypto's bad too." Then we started to see Bitcoin increase, the rest of the asset class come up, and then we had three banks fail. Silvergate, Signature, and Silicon Valley Bank. Now, those didn't fail because of their exposure to digital assets. They failed because of essentially interest rate risk and concentration risk. Yeah. But people started freaking about banks failing. Now, here we are in 2023, the summer. The digital asset class is doing well. Banks are once again doing well. And we're hoping to be able to talk to people to finish this round off very quickly. But the main thing it's really done is made my life more stressful rather than changing our overall business strategy.
That's interesting. So are you still bullish on the sector long term? And what do you predict will happen in digital assets over the next 5 to 10 years?
I'm incredibly bullish on the sector. I don't speak ever about the price action, so don't confuse that with saying I think Bitcoin is going to the moon or anything like that. It's inappropriate for me to ever comment about prices as the CEO of a financial services company. But I love the potential of the sector. What we expect to see is that the Congress will probably make some laws, particularly around stablecoins, but even if they don't, we think that they will put pressure on particularly this SEC to use their power under the existing laws in order to create regulation to make it more clear on certain types of assets. We think there will be a strong bifurcation between the commodity assets, Bitcoin Cash, Litecoin, Doge, which are essentially Bitcoin forks, Ether, and maybe some of the Ether forks, Ether Classic maybe. Those will be considered commodities. Then there's going to be the other assets that are used for creating companies. Binance Coin's one, but there's a bunch of others that are clearly funding vehicles for companies. Those will be securities, and I think there'll be no question they will fall into securities laws. Then you got a bunch of stuff in the middle that could kind of go either way. Stellar Lumens is a good one where I think it should be a commodity, but it could be maybe a security. We'll see. And they'll have to come up with a regime that makes sense for dealing with these assets. I can't look in the crystal ball and tell you which way it'll fall, either one. I'm hoping they become commodities so that our firm will service them. But I think we'll start to see some real definition in the space. But probably more important than that, because that's really from a trading point of view. We're going to start to see real utility start coming from these assets. We'll start, I believe, to see payments becoming more developed with the digital asset space. Maybe Bitcoin, maybe not. I don't have again crystal ball. Stable coins certainly. The great thing about that is a stable coin lets use. We can do real time peer to peer, right, and it's 24/7. Now we're getting into why I started Levelfield. If you'll permit me a slight digression.
Well, let's take a step back for a sec. Explain to our audience, what is a stable coin? I know, but they might not know.
Sorry. So cryptocurrency can have many different variants. The three variants that we think of all the time are commodities, which again, Bitcoin is a good example. A security, which is nothing more than a stock pretending to be a crypto asset, but it's really something used to form a company. We have things in the middle that'll go away. But stablecoins are a unique asset where they are backed one-to-one with a fiat currency, U.S. dollar in this case, for the ones that I'm thinking of, which means for every stable coin, there's $1 somewhere in a bank account. So its value should always be $1. And in the United States, the largest issuer is a company called Circle, and they issue something called USDC. Now, Circle isn't quite what I would call a fully regulated entity. It's not a bank, it's not a trust company, but they seem to be doing a very good job, and let's hope that they move forward under the new regulation and become a regulated entity. But even today, USDC, if we assume that it's always back one-to-one, can be used to move dollars real-time, peer-to-peer, 24/7. So if we have two alternatives, going through a traditional bank and doing a wire, which we know takes 1 to 2 days, requires processing and oversight by a bank, or we can send it in real time using USDC, using a stablecoin, and it can happen in the middle of the night on a Sunday, and it'll still get there. That shows that there's some real utility to that. And for those of your listeners who've ever sent a wire overseas, you know how painful it is, right? Imagine doing it in digital assets and having it arrive instantaneously in Madrid, as we were talking about.
Right.
I've done it, by the way. It's a magnificent experience. But it doesn't mean that banks are going away, right? Just because this stablecoin exists and we can do things 24/7 real-time peer-to-peer, it doesn't mean we don't still have a need for a bank, and that bank to hold the assets, the bank to hold the insurance. So what we think's happening, and what I love, and the reason I'm getting into this, is that the architecture, the plumbing of banks has to change to be real-time 24/7. Now, I was involved in the investment banking industry in two different firms where we transitioned from 24/5, right? We moved from a regional model to a follow the sun model,
right.
But we stopped.
Right.
Okay. That transition to 24/5, oh wow, that didn't go well. That really, really didn't. No, we did it, and now most banks are 24/5.5. Investment banks, are 24/5.5. But these are sophisticated players and sophisticated institutions. Here in the United States, we have 4,100 banks, retail banks, and only the top maybe 100 have the wherewithal to make any kind of substantial change. So we got 4,000 banks that are nowhere near thinking about this technology and probably won't be able to accommodate this change. So Levelfield, being one of the first banks that's thinking digitally native from day one, we're putting in that process so that we'll be able to operate 24/7. We're going to support digital assets, which means when the rest of the banking system starts to move to 24/7, we'll already be there. So our customers will already have that opportunity for that experience. So where do I think digital assets are going is not the right question. It's part of the question. It's where's banking going as well? And they're both going in that same direction. They're going to where the customers already are, which is an expectation that they will bank anytime they're awake, 24/7.
Do you feel in our society that the paper dollars and coins actual physical money is going to go away and everything's going to be with a card and credit cards and debit cards and digital currency where no one's going to have cash on them.
I don't have cash on me now.
Right.
And when I lived in Madrid and in the UK, I never had paper money. So we can exist today in a purely card-driven world, or Apple Watch, which I happen to love my Apple Pay. So I think the physical dollars are on the way out. Now, here's the issue with that, and because I'm not a big control guy,
right.
If anything, I lean in some of my thinking a little libertarian, which is I don't want the government involved in absolutely anything.
Right.
So there's a lot of talk about what they call a CBDC, or a central bank digital currency, and everybody says those are horrible things. And if they are enacted with any kind of controls, they are horrible things. But if they are a substitute for dollars, meaning that they're like a stable coin and no one can track your use of them, then I think it'll be a great thing. So if the government can give us something that is pure play dollar equivalent, great. If they can't, then the private sector will. But either way, I think between digital assets and the credit card world, money is not long for this world.
So what has been the biggest investment areas for you in building the platform, and where are you investing most in your business today?
So we spent a lot of money building out the digital asset platform. So we have a pure professional trading platform. I mean, if you will, like Coinbase or Binance, we have that functionality all in place. We have something called Easy Trade, which is single point and shoot. You just do that. And building and testing all of that took some time and effort. Now, they're not live today because we've promised the regulators we're not going live until we own the bank. But those are done and dusted, and that took more time and money than I cared to admit. But based on Coinbase's financials, we spent about $1 billion less than they did. So we're talking single-digit millions versus $1 billion. So I guess we're pretty efficient. We built a custody solution, but we didn't build it from scratch. We're licensing the best-of-breed third-party software. So we use something called multi-party computation and a hardware module. So that's done. We are in the process of building, or actually integrating, brand new banking software, real-time banking software to replace what Burling has, and that'll be ready by the time we get to the bank acquisition. So that's all going to be good. But the single biggest point in terms of spending money has been in the UX, in the customer experience, and the whole customer design. We have taken the lessons from the very best of the online vendors, right? There, everything's simple, it's intuitive, not a lot of buttons, and we're designing our customer experience to be very much the same. And that takes money. And that's where we put a lot of money.
So how do you approach making investments in digital assets? Are there specific digital assets you believed are undervalued today out there?
As of today, I do not own a single digital asset.
Okay.
I sold out my entire portfolio because I want to be able to say, as the CEO of a banking corporation, I personally don't have a stake in what happens in either one. The same way as if you went and talked to the chairman of the New York Stock Exchange, he wouldn't tell you to buy any single digital asset. We do believe, of course, that Bitcoin is the standard, and Bitcoin doesn't have huge price volatility, and will continue to be the single greatest one. Some of the Bitcoin forks, for example, Bitcoin Cash, we've been very interested in because of that whole split between Bitcoin and Bitcoin Cash. I'll leave others smarter than me to decide which one is the best technical solution. In terms of some of the others, I think we got to wait for regulatory clarity before we get in too deep into which ones should anyone buy. But if you're a believer in the overall asset class, if you're a believer in the future of a world that's a little more disintermediated, any of the major assets are probably interesting opportunities to look at. In terms of the ones that are clearly securities that are backed by a company, I would be a bit bearish, not because of the lack of potential in the company, don't get me wrong, but because of the uncertainty with regulatory action. And I think that anybody who raised capital to start a company using a digital token is probably in for a world of hurt in the future.
Interesting. So in the old days, there was an adage about the ratio of stocks versus bonds you should own in your portfolio. Do you have an analogous approach to digital versus real assets for an investment portfolio?
So I actually kind of think of digital assets as real assets, particularly Bitcoin, right?
Right.
I mean, I'm sure you've heard the argument that Bitcoin is just digital gold,
Right?
And there does seem to be some truth to that. And I've heard a lot of money managers talk about a 5% allocation should be in digital assets. I leave it to smarter people than me to tell you to what it should be, but it seems reasonable that in a fully diversified portfolio today, given the state of development of digital assets, one would be remiss not to have some portion of digital assets in there.
So Houston, Texas has been a thriving real estate market for many years now, and now it's aside from your home. Have you done any real estate investing in your career, and any commercial real estate in your portfolio?
Yeah. My entire net worth is in level field today.
Okay.
Except for my home. But level field is 5.5 years old. We did go through some incredibly lean times while we were trying to raise money because of COVID. So my wife and I are 100% staked in level field.
So your website has a wait list in order to join the platform. How long does it typically take to get approved?
Well, right now we have agreed with the regulators that we're not taking any customers on until we get the bank.
Okay.
So it'll be about Q4. We are not advertising anything at the moment, and I am always surprised when I get the weekly numbers of how many people are joining that wait list. The idea of having a bank be that provider for digital asset services has really caught the attention of customers. We think that we are going to be a much larger bank than our projections in a very short order. So, we love people joining up on the wait list, and we'll be working through that just as soon as we finish the acquisition.
How many people are on the wait list?
It's in the tens of thousands.
Oh, wow.
And again, given no advertising, that's pretty cool.
Are you going to be able to service these people quickly in the fourth quarter, in the first Q1 of 24?
Quickly is all relative.
Okay.
So as banks, we have to do it safely and prudently. So we're not set up to take 10,000 in a single month.
Right.
But we will take them as quick as we can.
Okay.
The platform can absorb everything. It's just that we got to verify everybody's identity and do all those checks. But more than that, when we onboard somebody to the forthcoming level field bank, we don't want to be a single product provider.
Right.
We want to make sure that we are their bank of choice, and we would love to be their number one bank. Now, we won't be that for everybody, clearly, but it's okay to be number two as long as we get a decent share of their wallet. And we're going to once we get them in and they try the products, we're going to, I think, be the leader in both customer service and user experience.
I would feel that someone's going to come in, once they learn about you, it's going to be a slow progression where they'll keep increasing deposits and assets with you. It's going to be a progression, just like any bank. It's one thing where you go to a Chase or a B of A or a Wells, they've been around so long, they have a lot of assets, a lot of backing. It's more, but as people get to know you and you grow, they will grow with you. I'm sure that's probably what your customer experience will look like.
That's exactly what we're expecting. We're not expecting a rocket ship. However, given that we'll be probably the only bank in the United States that is friendly to people who have digital assets and can offer these digital asset products, the sheer numbers of people should be quite interesting.
So for my listeners who are interested in learning more about level field, where do you suggest they start?
Right now, the website's pretty small, levelfield.us. That is a good place to get on the wait list. I do need to send out some more updates. LinkedIn is a great place to find out about me. Or you can look at Forbes.com. I am a contributor to Forbes.com. So once or twice or three times a month, I write little articles depending on what we're thinking about. They're not about level field per se. I'm not allowed to do that on the Forbes platform. But we do talk a lot about what's going on in the industry. When we get through these next funding rounds, there's some great media that's coming out. When we acquired Burling Bank, we got announcements. So we made the announcement, say, "Hey, look, we've acquired Burling Bank." We got what they're calling Super Bowl level coverage. Hundreds of millions of readers managed to see that announcement because the story was broken by MarketWatch, and again, I always thank them for that. Covered by American Banker, covered by S&P, covered by Yahoo News, and then was picked up by I don't know how many different media centers around the world. So Google level filled, and if we're not the first 3 or 4 pages, let me know because something, my PR team's not on the case, but we have some pretty good media, and you can find a lot about our vision there. And then keep an eye on Q4, which is when we, knock on wood, will be getting regulatory permission to acquire Burling Bank, and we'll be launching both online, and very shortly thereafter we'll be opening physical branches in Houston, Austin, and Miami on top of the branch in Chicago.
Oh, that's fantastic. Well, we're going to wrap up. You're an incredibly fascinating gentleman with, I believe, an incredible future ahead of you with digital assets. It's really impressive. So, Gene, we have a couch normally here in our studio, and our audience can't see it directly. And I say, you're 53 years old. We're the same age, same generation. And I say, lay on the couch, kick off your shoes, relax. Go back to when you were 16 years old. It's a long time ago for us. And knowing what you know now, the different experiences, you've lived in different countries and cities around the world and met a lot of people. What advice would you share with your 16-year-old self, knowing what you know now, to help advance where you were back then?
That's a great question. I feel like I should always give the answer from The Graduate, which was, plastics, if I remember that movie correctly. But the two things that I think I would say, first is tenacity, right? I did spend some time in the corporate world, big banks internationally, and I wish I had a mentor to tell me, shut up, sit down, and just take it a little bit longer. In big companies, even if you are smart, and I like to think I am, no one cares. Put your time in, work, and establish those connections, and don't worry about making sure everybody sees what you're doing being great. Just do great work. And I think that would be the first message that I would send to myself. And the second one would be when I took that company public in the year 2000, I was a little older than 16, but admittedly, I wish I would have known this as well, is again, coming back to staying power. You get hit, you get knocked down, dust yourself off, and go back into the ring. If it doesn't kill you, you can keep on going. And what I did at that time is I went back into banking, and I should have stayed as an entrepreneur because I had the ideas, I had the team, I had the ability to execute, but I just got the metaphorical shit kicked out of me, and I wasn't willing to do it again for another 20 years. When you're 16, you're invincible. Take the chances, swing big while you're young. And again, if you're going to go into corporate world, stick it out. If you're going to stay as an entrepreneur, swing.
Great advice. No, I've been an entrepreneur my whole life, and so you have to continue to fail forward. And times get tough. Times are great. You got to be able to balance yourself, and you got to keep pushing forward. And that's just how life is.
As an entrepreneur, I think of myself as sitting on a swing, and the swing oscillates between agony, really, and as far as ecstasy, right? I mean, you have good days and you have bad days, but you're constantly swinging back and forth.
And like I say, tough times don't last. Tough people do. And you could tell by, especially an entrepreneur, is how do you solve challenges and problems that arise, issues that happen in business and life. And people always ask me, well, who do you invest in? I invest in people that are solution oriented, but I want to know the person, the horse I could ride on in tough times. Because the person that can be solutionary and solve problems in any time is the one you could bet on, good or bad, who you invest money with. Anyone can pay you a quarterly return like we do in our deals. But when times are tough or markets are tough, or look at this market, we have a big gap between the bid and the ask. We have a rising interest rate market. How do you deal with those challenges? What do you prepare for? How do you acquire properties in our business? Or how do you loan money if you're a bank? And if you could look at that and keep pushing forward, you'll have great success. Business careers are over a long period of time. People think life is about you get quick hit in 1 year and 2 years and that happens. It doesn't really happen that way in life, in business. It's mostly about how do I sustain a long career in consistency, be reliable, be dependable. And that's who guys like us, that's who we gravitate to, those type of people. And that's what makes life a lot easier is when you can gravitate and see people of consistency, reliability, dependability, and that creates success.
I'm very fortunate in this company. As I told you, I started it with my son at my son's behest. And so he's 29, and I get to work with him every day.
Oh, wow.
And some days are great. And in those great days, I like to tell him that, don't worry, it'll turn to shit soon.
Right.
And when it's shitty, it's like, don't worry, we'll have another great day soon, right? And the key is to just get up every day, face what the day brings, and enjoy the good times. Make sure that you remember and you embrace it and you enjoy it, because there's going to be the next day which will be really challenging, and it'll feel like the world is ending and we can't possibly go on. But then there's tomorrow, and we're experiencing tough times today, and I wish the fundraising environment was better. This is the worst fundraising environment for anything to do with digital assets since they started 11 years ago. Yet we're still here, we're still fighting. Honestly, everything except fundraising is as good or better than I ever hoped it would be. We have a great platform. I have a team that is the envy of every firm in the world, because I've met some really great people in my career, and we brought them all together in a little company, and we've got more people coming. We are engaging in a great dialogue with the regulators. I got to tell you that we believe that we're going to get approval this year, and we believe that they're looking and listening to everything that we say. That's fantastic. And I believe that customers are flocking to our website and love the message that we're sending. I just wish I knew more people that wrote some checks so I can get this round done, so that I don't have to think about it. But the difference between guys like us who are going to win and guys that drop off and become never heard of in history is, even when it's tough, we still try every single day.
Yeah, you got to be present. You got to show up. And that's one piece of advice you could say to your son is be present. Don't worry about the future. We can't control it. We have no idea what's going to happen. And a lot of times you think this is what's going to happen in the future, and you're totally wrong. And so if you could live in the present in that day, the past is the past. There's only so much you have to live, the average lifespan now these days. And so it's, what exactly are we going to focus on now? Let's not worry about, we made our mistakes in the past, and we can grow, and you can stack what you learned to grow even into the future. But let's focus on today. And it's a great lesson that you brought up and that we're talking about, because a lot of people, especially in business, they're so worried about, like, what's going to happen next year? I got to prepare. Well, what's going on now that you can really gravitate to and get your mind around?
And we try to do that. I mean, of course I have a 3-year plan because the regulators make me. It's not like
of course.
But we have a plan. We have contingencies for almost everything. But the important thing is, what can you deal with today? The things that you can't influence, don't worry about. They'll come soon enough. And we're trying to pay a lot of attention to actual deliverables, and that's one of the things that, again, I keep mentioning the team, because no one's a one-man show. It's always about the guys that you have associated with it. Is our team reacts, and we're reactive, but we're also proactive. We think about what we want to do, and we make shit happen.
That's right.
And I think that's the overall. If you're going to choose a team of winners, you want guys that, no matter what life throws at them, they can react. They can put together a plan, and they can execute. Yeah,
you need a bunch of lions around you, because that's what's going to elevate you to the next level. So, Gene, it is our last day on Earth, God forbid, and it's just me and you. And it's our last meal together. It's your choice. What are we eating and what are we drinking?
Well, I'm going to disappoint you, because we're going to have hamburger helper.
Oh, wow. I haven't had hamburger helper since I was a kid.
Yeah, well, I grew up.
Is it still around?
Oh, it's disgusting, but I love it.
But can you buy it in a grocery store?
My wife does it for me. So
wow.
I grew up, I like to joke that I was aspiring to be poor. Mm-hmm. We did not have a lot of money. There were times where we went hungry. But when we had some money, we would get together and have Hamburger Helper.
I loved Hamburger Helper as a kid. I loved it. You know what was kind of gross is I think they had Tuna Helper.
That's disgusting.
Which was really gross.
Yeah, I can't do that.
I remember like that was in the house. I'm like, all right, I'll starve to death before I go that route. But I loved Hamburger Helper.
So we're gonna have Hamburger Helper, and we're gonna and as a beverage, Colonel E.H. Taylor bourbon.
Wow, I love that meal. Sign me up. I'm with you. So in our studio, Gene, behind you, we have a black door. And you can see we have grand piano, a drum set, an electric, and acoustic guitars behind me. If you could have any band or musician walk through that black door, now they can be living or deceased. It's your choice. Who would you want walk through that door, and what song would they play us?
Oh, no, that's a really good one. Cab Calloway would be a guy that I would love to see in person, and I would love him to do Minnie the Moocher.
That'd be fantastic. That's a Chicago roots kind of act coming in. I love that.
My wife and I were down in New Orleans way back when, I guess it would have been around 1990, and we missed him by that much, and I regretted it to this day that we didn't get to see his performance.
That's a shame.
Yeah.
Well, Gene Grant, thank you so much for coming in, especially to come from Texas and on your motorcycle and come in studio in Laguna Beach. It was a real privilege to speak with you today. If you're interested in learning more about the knowledge that Gene Grant just dropped on us, kick that right-hand button and click subscribe. Click the like button as much and as many times as possible so we can let this wonderful content, and as I say in the ether, let it go viral. To follow me, go to benreinberg.com, and to learn more about commercial real estate, go to my company, alliancecgc.com. We are the leaders in the United States in investing in commercial real estate. Feel free to log on to our new fund, the Alliance Medical Property Fund. It is the hottest fund in the United States. If you are looking to build wealth for you and your family, look no further. Go to alliancecgc.com. Gene Grant, thank you for joining us, and it was a real treat.
Thank you, Ben.
Thank you for listening to the I Own It podcast with Ben Reinberg. To hear our past episodes and connect with Ben, visit benreinberg.com.